The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls. Now, toll free at 1-877-927-6648. Internationally at 727-445-1044. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. We are having Rich Anderson on the show today at 12:30, and it is really good timing on Rich's part because last week we were talking about soybeans. He had an idea, and the pattern is lining up. Soybeans just made a new low on the week just a little while ago, so this is really setting up for today. We'll have him on in about a half an hour, but first I just wanted to go over some of the commodities that we usually watch. I put in the chart of lumber. I haven't traded lumber in well over 30 years. It's rather thinly traded, mostly by professionals, and of course some hedge funds, I'm sure. But as you can see, it made that Gartley a few weeks ago, and it's had a pretty good bounce off the bottom. Now, I've also put into the Tiger TV the DBA, which is the agricultural ETF. And as you can see, since last March, we've been in a sideways pattern with a slight bias to the upside, very slight, I might add. And that's telling us not very much because it's come down quite a bit from 29 down to 22 in a year, giving back well over 40% of its value. So those are just some of the things that we wanted to look at. Now, I think one of the let's just go into the stocks for just a second. First of all, the New York Stock Exchange Index has now taken out the high of April 27th. That should not have happened if this was a bearish scenario. Yesterday, we made a new high in the S&P futures, in the S&P cash by a couple of pennies. Today, we took out the New York Stock Exchange Index out by a point. We got the VIX Index almost ready to make new lows. Looking absolutely horrible. The Dow Jones also made another new high. And so, it's pretty difficult to be bearish. And we had this Mercury retrograde, full moon, new moons phenomenon that extended into the 19th. It's never more than 2 days. Today's the second day, but frankly, after the market reversed all of the Fed minutes yesterday and closed on its low and then come back and take it all back today, that's very bullish action, folks. So the only way you can be bearish this is if the Dow gets below 18,170. And then I think you could probably look at it from the short side. But right now, no matter what happens, it goes higher. That's a sign of strength, and you just don't want to fade that. So I'm assuming that the Mercury retrograde new moon is going to fail, and we'll have more information on that by Friday and Monday at the latest. But frankly, right now, it doesn't look very good. Gold and silver, they're backing the gold. Let's do gold first. First off, we'll start off with the XAU just to show you what's happening because we have a very interesting pattern here in the XAU. We were expecting this pullback in gold because of the fact that we had the situation where we had the market up against strong resistance up at that 61% retracement level. In gold, that came in at the $12.32 per ounce, and now we backed off $20 an ounce in gold, and we're coming down to the spot where it looks going to be pretty good. Now, I forgot to put the blue line spot gold price into this, but the reason I did that was because I did do the gold chart, and I wanted to put the gold chart up next, and we can take a look at that, and you'll see that we're looking at pretty much the same thing, almost exactly like the chart of the XAU. But interesting about this, and this is what you'd like to see if you're bullish gold, and frankly, I still am, we're having a nice, quiet 3-day pattern. Actually, this is the 4th day down from the high that we made back on the 18th. So we're 4 days down. We're right at the 50% retracement of the low in on April 29th, and that's also a 382 retracement of the low from March 16th. So if we can hold this $12 level, I think gold's got a chance to turn from here. Frankly, I think we're going to go one more time down to that 1192 area. which is that 61% retracement, and that's what I'm waiting to buy. That would be like 5 days down into Friday. We've got that weekend coming up, which is we're going to be closed on Monday. So I would assume that we are going to have a situation where the market is getting ready to probably have its move over the weekend, but we'll watch it very, very closely. Now, remember, on holidays, the day before the holiday, which would be Friday, the market has about a 70% probability of closing higher. You're in an up week and an up month. It's going to be difficult for the market to reverse itself Wednesday and Thursday and close badly on Friday. That's the way it looks from a statistical point of view, but it's still, things like that can happen, but you have to go with the odds, and that tells you that you want to wait a little bit before you want to watch that. Now, the next one we want to take a look at is the silver market. And if I can just find it here, there we go. Silver is acting very nicely also. We had the nice ABCD pattern form. We went up exactly to the exact price. And we'll just get this up in here. And you'll see we made the ABCD. And now we're coming down. We're only in the third day down. We can't even make lower lows than what we made on the 19th, folks. That was just 2 days ago. And so this is the silver is really starting to act bullish. That's only a 382 retracement on the low of the 27th, whereas gold's come down to the 50% level. So keep an eye on this, because I think we've got a chance that this thing could possibly surprise some people to the upside. It already has somewhat, but it certainly looks like it has more time to go. We're just having a normal correction now. We have to wait to see what this correction is going to be before we head for another leg higher. We could pull back all the way to the $16.50 per ounce level. That would be at that apex of the triangle where we broke out of a week or so ago. And now I think that's a possibility of doing that. But given the fact that we can't make a lower low than the 19th, is still early, but it's 15 cents away. Actually, more, it's 25 cents away. It's really, it's quite surprising how strong silver is acting today. So I still recommend, if you have a chance to buy some of the silver eagles or silver rounds, as they're called, U.S. government coins, 1 ounce, they'll be under $20, probably around $18.50 per person, $18.50 to $19 each. And I think that's a good thing to have. It's just something that long term it looks pretty good, and given the pattern that we have here, I think we have a stronger chance to even go higher than lower, because we are already above the highs that we made in March. We pull back just a little bit, but we're still right in that zone where we were. That's another really positive sign, and so that's something else that we want to, really keep an eye on. Now, I'm going to do the corn, beans, and wheat when Rich comes on the show at the half hour. So what I'd like to do now is to go in and look at the, take a look here at the, 1 second here. We want to look at start out with the energy complex, because we have a very interesting pattern here in the energy complex. If you hold on 1 second here, we got a caller on the line, but we'll do this chart for the natural gas, and then we'll take our call from Brent in California. Hi, Brent. How are you?
I'm doing great. Larry, how are you today?
I'm very good, my friend. What can I help you with?
I just had a quick comment. I didn't get a chance to listen to your show yesterday live. I listened to it in archive. I love the story about the soybean trade back in the 70s.
Yeah.
That's good stuff. It was entertaining. I liked your story. Very good.
Well, I remember it vividly, for sure.
I would imagine so. I had one other just real quick story. I think we live in that older house in Martinez.
Sure.
And talked about silver coins. I've done extensive remodeling on the house, but I had my oldest son, Shane, his bedroom. I had the walls opened up, and I was kind of just cleaning things up before I was going to insulate the walls, and I was vacuuming, just cleaning stuff up, and all of a sudden I see this round object on the bottom plate, and I realize it's a coin.
Mm-hmm.
And it ended up being a 1917 Standing Liberty quarter that obviously in great shape. It had been sitting back there for almost 100 years, and ends up it's a relatively rare coin. The first mintage of that coin is in 1916, and then 1917. Yeah, they only did. There was kind of a controversial deal with it. The Liberty has a bare breast, and so obviously back then that was pretty racy, and so they stopped that style of it. They call it I guess a one of that particular coin. So they only struck it in 1916 and 1917, half the year, and it's from San Francisco Mint. But yeah, and it probably grades about I'd say conservatively a 65.
Oh my God, that's a fabulous. That's worth probably $500-600, that coin.
Oh yeah, at least. So yeah, it's just interesting. It was great to find it, and it was preserved back there all those years. It was pretty fun to find it.
As I recall, my grandmother used to live in that house, and she told me she had lost that coin. Do you think you could return it to the family?
A finder's fee.
Brent, when I was a kid, we used to have a lot of old houses in Terre Haute, Indiana, and we used to go in when they were demolishing them. Before they did, we were just kids, 10, 11 years old, and we used to go in and help them demolish by, banging on the walls and everything. And one of the days, me and my two buddies banged into one of the walls, and we hit a little strong box, a little toolbox, and we opened it up, and it had $1,500 in it. And
wow,
that was a lot of money in 1951. Let me tell you, that was a great deal of money. And so the house was due for demolishing, and of course we didn't know what to do. So my mom says, "Well, you've got to go to the police." And so I took it to the policeman, and the guy said, "If no one claims this within 6 months," he said, "the money's yours." And no one claimed it. And me and my buddy Bob and Buck, we split $500 a piece. So I used mine at the horse races. Those guys put theirs into, I think they bought Exxon Mobil, if I remember. Those were the good old days. But anyway, that's the way it goes. What else can I help you with, my friend?
I was calling about the stock is Mosaic, MOS. And I bought it. If you go back to October of 2014, from that low to the high of around 53, it looks like it did a 786, so I bought that retracement around 44. I just wanted your opinion, please.
Okay, MOS. All right, give me a second here. I've never looked at this stock before, and I have to refresh it. Hopefully it'll come in and we'll be okay. Yeah, this is a nice one here. It's acting really nicely. I don't see why you bought it at what price?
At 44.
Well, it's right near the 786. That's the spot where you're supposed to do it. It lined up really nicely. I don't see any reason why it can't go higher. So, listen, thank you for calling in, my friend. I certainly appreciate it. Do you have any more? We can do it after the break if you do.
All right, take care, Larry.
Okay, thank you, Brent.
All right, bye.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading pattern. Many investors spend days, weeks, or even months searching to find. Right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk, tend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, I posted a chart in showing the gasoline futures, and then I've posted the chart overlaid on top of that, the chart of crude oil. And as you can see, crude oil is lagging badly, and crude oil is the leading thing that you make gasoline out of. They crack it into heating oil and gasoline. So that's what we're watching here, is this divergence that is going on. These markets are huge, folks. These are next to treasury bonds and treasury notes, are the most actively traded of any things in the commodities that we deal with. Now, if we go in and we look at the crude oil in itself, where we stand right now, you'll notice that we completed a Gartley pattern just the other day, down at the ABCD pattern, down at that $58 a barrel level. That was a 382 retracement of the low back on March 16th. Now we've rallied up to the 61% retracement of the high on the 11th. That's also 50% retracement for the high on May 4th. And we have that pattern known as the 135 pattern, where the markets are making 3 and 5 are making lower highs. Now, if this is correct, we're not going to see crude oil get above $82 a barrel. That's about $1.30 from where we are right now. So this is the area where it should stop. Now, having the wide range that we're having today, that would tell us that we would most probably be looking at some further strength, taking us up to that 6170 level, which would still be a 135 pattern, but it would be stopping at the 786 and not the 61% retracement. So the $64 question is, how do you handle it? Well, the high today was 60.89. Right now we're trading at 60.72. You know, if you really believe in these fib numbers, you'd be selling around that 60.85 level and risking about 20 cents, because these are that accurate. They either stop right on those numbers or there's something wrong. So if you risk 30 cents, there's no big deal, and then you don't have to worry about it going another $1.50 higher if it goes up to 61.71, where you might try it again. I mean, if you can buy it back when it was at the 382 level, you certainly should be able to try to sell it if it gets to the 618 or the 786. That's the way, that's the way it looks like to me. We are approaching new highs again and everything. I believe the NASDAQ has already made new highs, and yep, it looks like it has. And that's what it almost did yesterday during this run-up. But unfortunately, markets turned on a dime. Well, it hasn't made a new high. It's just a couple of points away, but I'm sure that it will. The Dow's only about 40 points away, so most probably that'll happen here, very, very shortly would be my guess. We'll have Rich on at the half hour because we have some things to talk about in beans and corn, because we got a potential of something really good happening. Okay, the next future that I wanted to cover, we've covered the gold. I want to cover the Treasury bonds here because I think this is the one that's, really still in a very massive bear market. We've been down for so many times, so many days in a row now, you could hardly count them. I think there's been one or two up days along this run, but as you can see, the trend is sharply down for the whole month. But we are starting to see signs of a potential bottom, because we've had a higher bottom than we did last week. That came in at the 786 retracement down at that 152 level. So there's a possibility of that occurring. But any move up into the 157 level, which is 4 points from where we are now, would be a spot where I would think you're going to run into a great deal of selling. The bond market is under a great deal of pressure, and rightfully so. And if we take a look at the junk bond market, I should do that because I'm watching that very closely, because I think that's where the real problem is going to lie. Let me get to the high grade. There it is right here. I just did this a little while ago to show you the relationships here of what's happened to bonds versus the let's just get this in here so we can see it a little better. Okay, hold on. Yeah, there we go. Okay, the blue line that you're going to see on the chart is the 30-year Treasury bond, and you can see how it's collapsed since late April, whereas the junk bonds have not even taken out the lows of March, and we shattered those lows by a great deal in the Treasury bonds. So the bonds are very, very weak, and they're still yielding close to 3%. But that doesn't seem to be enough because people want more interest. And that reminds me what Bernard Baruch said: don't be concerned on the return on your money, be concerned on the return of your money, and always get your capital back. That's the key. Whether this is going to happen this time or not, remains to be seen. So we'll have a pretty good idea in the next few months if these bonds and junk bonds and corporates are going to have trouble. We'll have Rich on at the break here. Got stocks near new highs and crude oil up $1.50.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com. Now, back to the Futures Hour.
Okay, we're back, and I believe we have Rich Anderson on of Anderson Capital Management. Are you there, Rich? We'll have him on just shortly.
I'm here.
Hey, welcome aboard. Say, we're getting really close. Last Thursday you were on, and you told us about the soybeans. And what I wanted to do here, oh dear, now that's what happened. Here we go. I've got them right up. I want to bring them up because we've made new lows just like you thought we would. And we are very, very close to making new weekly lows. And I want to get this chart in here because we are almost right at a perfect Gartley pattern. And we are making a butterfly pattern and a 3-drive all at the same time, coming in here at this very close to the $9.10 a bushel. So you want to tell us what do you think about this possible scenario and what it looks like?
Well, with the long weekend for Memorial Day coming up, it's quite frequently you'll see changes in trends over long weekends. Basically, there's been a lot of people getting out and leaving town early, so the markets and the volume is really slowed down and quieted down. The weather couldn't be much more perfect. It's like a greenhouse out there. The crop conditions next week are going to show that we've got the vast majority of stuff planted, and anything that's planted is looking great. So there's no weather concerns. But the only thing you have to do with weather is just wait a few days and it'll change. You know, it was too dry and now it's too wet. That's what's caused this rally today in the wheat. It's a little too wet. So I'm thinking that you know, you're a long way from from harvesting the crop and putting it in the bin. You've got the critical month for corn is July. Critical month for beans is August. The one thing you can say with certainty about the weather recently is that it's been more extreme, and that the conditions have lasted longer. You know, when it gets wet, it seems to continue to be wet for longer than normal, and when it gets dry, it seems to get hot and dry for longer. The high pressure ridge is moving further north, which will give us a more seasonal temperature coming forward in the next week and a half, 2 weeks. It was really cold. I mean, yesterday the highs in Chicago were mid-40s. And
oh my goodness, that's really cold for mid-May. Oh, end of May. My gosh, that's incredible.
I know. So these
Rich,
are,
in
you know,
'83 we had a. Oh, excuse me for interrupting, but in '83 we had a move that started over Memorial Day weekend, and I posted into the Tiger Den the cycle that's there going back over the last 4 months. It's a 41-day cycle, and that bottoms on Tuesday, the day after we come in from the holiday. So that's the time we probably want to be watching beans for the potential low somewhere between $9.10 and $9 a bushel. And tell the folks that you become a farmer, correct?
Well, I grew up on a farm. I've always
yeah. Well, I know you did, but instead of putting all the money into land and equipment and labor and all the stuff, you basically
I just do the board. You know, just like I'm a cattle feeder too. But I don't. When you're feeding actual cattle, if it gets too hot in the summertime, they have they can die of heat exhaustion, or dust pneumonia. Or in the wintertime, too much cold, and so it's just easier to use the futures market as my vehicle rather than actual live animals or growing stuff in the ground.
Now, Rich, how many bushels per acre? Like in order to get a 5,000 bushels per contract, how many acres is that a person has to own in order to produce 5,000 bushels of beans for one contract?
Well, you're talking about the government is projecting 100 trendline yields are like 166 bushels an acre. Okay. Mm-hmm. 2 years ago, I think the 5-year average is only 150. So 150 bushels an acre and 5,000 bushels to a contract. You're only talking what is that? 37, 38. It's not that many. It's not that many acres. Mm-hmm. It's not that many acres.
Well, but farmland's pretty expensive, though,
200, right? 220 bushel corn. So there you're talking even less acres. You're talking 25 acres.
Yeah. But what is a good acre of good farmland run now, Rich?
Well, we were just having that conversation before I got on the phone, and David's got land out in Indiana, and it was appraised at $10,000 an acre, and a little bit 2-3 months ago, some land sold for $12,000 an acre. But that land will grow 220 bushel corn. In Minnesota, that's probably $9,000 an acre. In South Dakota or North Dakota, it's probably in the $6,000 an acre. But out in South Dakota last year, I think we averaged 150 some bushels an acre versus 220 in Indiana. That's the difference in the price.
Sure. Now, what is your, we had this buy signal in corn a couple weeks ago, and it's actually done pretty well. It backed off and held at a higher low, which is one of the nice things you'd like to see. But what's your feeling on the corn? We're looking at pretty much the same type of a weather pattern?
Yeah, it's the same type of a weather pattern, and it's, July is going to be the critical time for that weather pattern. And I think on the corn, the acres won't be as big they won't have as many acres planted this year as they normally have in the past. And if that's, we won't really see that until the June crop report. And then after that, we're going to start to see that, oh, gee, they didn't spend as much money on the seed. The more expensive seeds are drought resistant and every other kind of resistant. They call them stacks. They're quad stacks, and even some of them are 5 stacks of different genetics into the hybrid of the seed. But they're trying to save money this year, so they're using slightly less fertilizer, using less expensive seed, and I think that'll show up later in the year in the yield prospects for corn in particular, less so for beans, but particularly in the corn. So if we get any, the jet streams moving back to normal, will be normal for a couple of weeks, then all of a sudden, let's say it starts to put in a blocking ridge or something, or we start to get some pretty big heat zones coming in here. Corn could all of a sudden have a 10 to 20. It's just typical that it'll have a 10 to 20% rally. I mean, that's what happens in the summer, because once the farmer puts that money in the ground, the markets get very sensitive.
Yeah, that's for sure, especially with credits the way it is right now. That I understand that some farmers are actually having trouble getting bank credit. Have you heard any of that?
The operating loans. When you go into most of the younger farmers have operating loans, and when you sit down with your banker and you're showing them that I can grow 150 bushel an acre corn, but I can only get $3 a bushel for it, and so that's $3 times 150 is $450, and let's say I'm paying $200 in cash rent, and I've got another $180 to $200 in cost to grow if I'm lucky, I'm just barely making a profit, and if anything goes wrong, I've got a loss. And
Rich,
so the bankers are less willing to lend money this year. That's why they have to plant with less fertilizer and less expensive seed.
Okay. We have a question from one of our listeners, Mr. Z in Philadelphia. Wanted to know, why is there such a discrepancy between cattle on the board at 152 and cash cattle at 160?
Well, that has to do with Memorial Day weekend and quick shipment. We have traditionally made our highs in the spring, and from the spring highs, we've traditionally gone down anything between $10 and $20. So let's say the spring highs were $1.65. If we go down, well, $10, we're already below that on the June cattle, but because we're at a relatively high price, $10 would have been a typical in a year when we had $80 or $90 cattle, and now we've got $1.60 cattle. So let's say we typically go down 12%. So we're expecting that the cash market will go down something near $1.45 to $1.48. And what happens is the weights start to go up. As the weather turns nicer, it's a little easier for these cattle to put weight on and gain weight. And so you're already seeing the average weights in Texas go up, and then the rest of the nation will follow in the next 2 to 3 weeks. That's, the south weather gets better before the north weather. That makes sense,
Rich, I'm going to put your heat to the fire on this one, but give me your odds of what you think the possibility are of us having a pretty substantial weather change in the market that could rally beans $1.50 or $2 like we've seen many times before. And that was at a $5 or $6 level, but at a $9 level, they could easily go back to 12. I think you need to think in terms of percentages, just like we were talking about in the cattle. A normal $10 break on a $80 contract versus a $1.60 contract is a lot more. So on a $9 bean, it's easy to get a 15 to 20% rally. So that's a 20% rally would give you almost a $1.60, $1.70, and they often overshoot. So a $2 rally is not unusual. If that's going to happen, it's going to happen between now and I'd say the end of July. So the September options and the September short-dated options, if you want to play the new crop months, which is what you typically want to do, are where you want to go if you're going to use an option as your vehicle. I reminded us years ago when we were we chat every day almost anyway, but before we traveled talked several times. But when I was back at Drexel, you remember the housewives picketed on cattle because the prices were too expensive back in 1978. I think that was at 70 cents a pound, wasn't it, Rich?
Yep, that was 70. And then they went straight down after that.
Yeah, they sure did. And now they're trading at, what, $1.50? So, and no one complains about it because it's different this time, that's for sure.
Well, there's no question. But the biggest, other than the U.S. government, the biggest user of meat is McDonald's. Mm-hmm. And, they're being challenged on all fronts from all these different hamburger joints, not to mention Wendy's and Burger King.
Sure.
And so they've come out with a sirloin burger. I think they came out with that on May 12th. Now, I don't know how that's selling through, but they need to have try and attract the high-end burger eater. Now, the sirloin is only 5% of the beef, and that's helping to support the fat cattle for the moment. But, that's a special deal, and I don't know how long that's going to last. Part of the reason the cattle were so high last year was the shortage of cow beef, and so they had to use some of the lean beef to make hamburger. That situation has been self-correcting, particularly with the Australian and New Zealand imports, and we'll have less so of that this year. And that's another reason that the June and August cattle are so discounted.
Okay. Now, do you have wheat is, bounced quite a bit off the bottom. I mean, now that's not related to weather and stuff, but
right.
Today's rally 60
related
cents.
To concerns about too much rain that's starting to develop, and some Australian wheat was sold. India purchased some Australian wheat.
Okay, so that's just mainly a short-term demand situation? A
short-term demand situation and concern about being able to harvest. I would think that the wheat has the potential maybe to 540, 550. The corn will have a more difficult time rallying because so many of the farmers have corn on hand in their bins, and so any pop in the corn market, like we've seen in the wheat, will be met with a lot of cash sales. There isn't a lot of cash wheat sitting in the farmers' bins, unlike the corn. So the initial start in the corn will be much slower than it has been in the wheat because you'll have this cash grain that you'll have to liquidate first, selling that into the market. Mm-hmm. And the commercials were net long, one of their largest positions ever the last 3-4 weeks. And the small specs and the large traders were the largest short they'd been. Now this initial rally changed that position maybe 10%, but there's still a lot of contracts that need to be shaken out of the trees, shall we say.
Oh, I know. That's really it's really quite amazing, isn't it? Now, Rich, do you see any special situation in any of the commodities that deserves our attention? Because you follow everything, and I only follow selected things. So,
right. Well, last week I told you that I thought that euros and the crude oil were pretty good sells, and I thought that crude oil deserved to go back down towards 58. Needed to hold there. If it doesn't hold there, it'll eventually go down into the 50s. The one market that I don't trade, but that I'm keeping an eye on, is the coffee. In fact, I don't even drink it, but it's down here. It's kind of contracting, which means it's running out of sellers, and I think that might be an interesting one for the upside.
Hey, listen, thanks for joining us, buddy. We'll have you on in a couple weeks, okay?
All righty, thanks.
Thank you.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they've just released the second running of their 5-year Market Safe Futures Economy CD. This is a CD that could really deliver, but you only have until June 11th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all of the upside at maturity. And should they lose, no worries. There's zero downside risk here, as you get back 100% of your deposited principal. Don't miss out. The June 11th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN. Now, back to the Futures Hour.
Okay, we're back, folks, and we've went up and matched the highs in the NASDAQ. I hadn't checked to see if the NASDAQ cash had made a new high or not, but let me double check that just right here and see if we can double check that. And I think this is it, and we will see. I can't get any data to come up. Hello, Federal. Nope, not getting any data. If someone in the Tiger Den would double check that for me to see if the cash index, I don't think it makes a lot of difference except that we're over this really critical time date. This is the last, in fact, we're in about the last 2 hours of it, folks, 3 hours. This is a number that has been here a long time coming. Probably might fail. You know, some of your greatest disappointments come from unfulfilled expectations. So, and we'll see what's going on here. I do believe that that we are over our major top in here, but the market doesn't want to believe it. I sent the market a note this morning, and evidently no one got the memo. So we'll have to look and see. Now we've had a 61% retracement in the in the euro. Let's try it again, Larry. We had a 61% retracement in the British pound, folks, and that is one that I really liked from the short side last week at 158. We went all the way down to 154. Let's just put it up, and I'll show you what it looks like here, because we are setting right at a, let's do the 30-minute. You can see it a lot easier. There we go. And I'll put this in here to take a look at it. And you'll see that after we made the 135 pattern on the downside, we've had this really strong rally up here, setting right at the 61% retracement of that high that we made a long time ago. And remember, this on the long-term chart, this has one of the most bearish patterns that you could possibly get, with 5 ratios coming in at 158. That doesn't mean that it's going to stop at 158. If it goes popping through there, it could be just like the stock market. Away it goes, and it's going to go a lot higher. So, always keep your powder dry and don't risk more than you can afford, and you'll be okay, because these patterns will make you more money than they will lose you if you use a little bit of common sense. And common sense requires that you actually come in and use a protective stop and not hurt yourself when you're wrong. And that's one thing that I've been waiting for, this time frame up in this area for quite some time. I thought the game was over last night after the Fed minutes came out and the market ran up to new high ground in the NASDAQ, and then sold off to almost make new lows. But this morning you came in and the market couldn't break. Was telling you that there was something in there that didn't want it for it to go down, and what happens? You go right back to the highs again. That's how tops are made, folks. If you think about how bottoms are made, this is how tops are made the same way. It goes up into supply and then back down into demand, and that's what we have going on here. So it doesn't look like the astro cycle is working here. The Mercury retrograde of new moon, the last day is for today. It only has a 2-day orb, 19th, 20th, 22nd tomorrow. That's it. So we're coming into a weekend that's has a positive bullishness usually in the market, in an up week, in an up month, day before a holiday. So it's hard for the market to make any type of reversal between now and Friday. But it reversed, the NASDAQ has gone 50 points up, 50 point down, and 50 points up, and it's done nothing. It's a 150-point move, and it's the same place it was 3 days ago. So, I mean, even though it's a lot of activity, not really a whole lot is happening. There's no upside breakout as of yet. That'll probably happen on the close today, but that's what it looks like. So that's what we're watching, folks. So live every day in an attitude of gratitude, and may God bless. And do something nice for someone today that has a lot less than you. May God bless.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.